Hello everybody, is this on? I'm thrilled to see so many people actually came back. Yes, with Glenda, who kept saying, come to the deep dive where we'll get really technical, I thought she's going to scare everybody off, so I'm glad to see that so many people returned. Okay. Right, tell me if I'm too loud. Okay. Well, I should say, this session is about buyer information and strata renewal, and I'll be going into a lot more depth, but Glenda's done a really nice job on touching on the main points. My name is Kelly Whitfield. I'm the Principal Policy Advisor. I've been working on the strata reforms for many years. I think since 2011 or so. I did get a little time off for good behaviour, but then I returned. We're planning today for this session to be 30 minutes long and leaving 20 minutes at the end for questions. So if you can hold your questions until the end, that would be great. Yes, so I'm covering buyer information and strata renewal, and that will cover some of the challenges under the current Act, what's changing when the strata reforms come into place, and how to find out more and have your say. I think pretty much everyone was in the session just then, weren't they? Oh, some no's. Okay, so I will touch on some of the how to have your say points. Okay, so the strata reforms have been really extensive. The main changes to the Strata Titles Act were brought in late last year in Parliament. The Strata Titles Act is the act that tells you how your schemes are managed and tells you how you need to run your council and all of those details about strata. So that Strata Titles Act was amended late last year with a really comprehensive suite of reforms where at the same time we also introduced the Community Titles Act. That is something that we are hoping to finish up and we'll be coming back on the public consultation of that hopefully early next year, so stay tuned for those consultation sessions. But the strata titles reforms are not yet in effect. This is the next stage, the final stage in bringing those reforms into effect. So what we're doing at the moment is finalising the Strata Titles General Regulations 2019. One of the things about these regulations is a key thing that they do is when they're finally proclaimed, they'll actually bring into effect all of the changes that we made to the Act late last year. So that's one of the key things that we're eagerly waiting for, and that will allow the strata reforms to go ahead. So we're actually consulting at the moment on these regs, and that's why you're here today. So thank you very much for taking part in developing better strata reforms for Western Australia. So the Act has the main sort of sections to do with how strata schemes are run. The regulations include a lot of the detail that it's not appropriate to have in the main Act, and the Act and the regs together, that's the whole suite of strata reforms. It's how stratas are run in Western Australia. Here we are now in September. This is our public consultation phase, which you're taking part in. At the end of September is the closure date for consultation, and after that finishes, we'll be spending October working frantically behind the scenes to take on board all the consultation and, where appropriate, make changes. And we're aiming to get the regulations finalised and tabled in Parliament in November. And once that happens, at some point, I mean, we can't control how long Parliament might take to go through them, but as soon as possible after November, we're really hoping for finally the strata reforms to go live. Okay, there's a lot of changes. So up here on this slide are the key reforms on the way. Better information for buyers is what this session covers, and also introducing safeguards for the termination of schemes. There's also a lot of improvements to scheme management. Stay around for the next session at 11:20. It'll be me again, and I'll talk about improvements to scheme management. Then at 12:50, we're going to have a session on simplifying dispute resolution. Stick around in the afternoon for my colleague Alison, who'll explain more detail about the new form of strata tenure leasehold schemes. And then at 3:10, there'll be a session on enabling more flexible staged subdivision. So here we go, buyer information. Living in strata is different to living in an ordinary freestanding house. Strata owners share expenses, they share maintenance responsibilities, and things like having insurance for the strata scheme common property. So it's really different. And one of the things we've discovered, we often get feedback from people who have bought into strata, and they say to us, I didn't know, I had no idea. Or I remember one comment from somebody whose complaint was, my strata company isn't very good. Not understanding that under the Strata Titles Act, the strata company is actually all of the owners in the scheme, and she, being an owner in the scheme, was actually part of the strata company. So she actually had a role in maintaining her own strata, which she didn't actually know. So strata owners are subject to bylaws, unit entitlement, common property, common agreements. It's a shared form of ownership, and there's a lot to it. It's vital that buyers who are buying into a strata understand what it is that they're buying into. And so we've provided more information and better information for buyers so they have a better chance of understanding what it is they're buying into. So, what do people currently have to provide? Glenda's already touched on this a bit. Under the current Act, the seller must give the buyer the strata plan. The strata plan shows, for example, the entire lot, a sketch of the building, for example, and the lot, the specific lot that's for sale. That is, if it's a built strata. If it's a survey strata, it might just be the plot of land. That requirement currently to provide the strata plan, that's also carried into the strata reform. So it's required now, it'll be required in the future. The seller must also give the buyer the unit entitlements. And again, that's required now, it'll be required into the future. Unit entitlements are very important. They show sort of the aggregate unit entitlement for the entire scheme, and they show what the lot's unit entitlement is. And that's really important because that determines what levies the lot will have to pay. And it also establishes the voting rights that that lot will have. So important information for the buyer to understand. Now, here's a bit of a gap. Under the current Act, the seller must give the buyer any non-standard bylaws. And what that means is, well, for example, the Strata Titles Act at the back, Schedule 1 and 2, it has default bylaws. The current requirements that any non-standard bylaws be included, it means that, well, if you're having the default bylaws, but we introduced a bylaw, you can't have dogs, then all the buyer has to give the seller, all the seller has to give the buyer is the bylaw about dogs. That's a bit of a gap because it might not necessarily tell the buyer where they can go to find out all of the rules that apply to the scheme. So currently the seller doesn't need to provide minutes. And again, that could be a real concern because minutes often show how the scheme is functioning or not, and some of the major issues that are being considered. Also not required currently is information relating to debts and the levies payable. That could be something that the buyer would really want to know about. Now, if the seller is the developer, they must also give information about contracts, levies, and any special arrangements in relation to the common property. So that's the current regime. Okay, so we've introduced some new requirements. Before the contract is signed, the seller must give the buyer the scheme notice. What's a scheme notice? It's a new thing. It's a document which must be registered to create the strata scheme in the first place. It sets out the name of the strata scheme and the address for service. If it's a leasehold scheme, it will set out the duration of the scheme. Now, if you're planning to sell your place, don't worry that you don't have a scheme notice. Really, the fundamental information is it's the name of the strata company and the address for service. Okay, also included, the seller must give the buyer the scheme plan. This includes the exact location of the lot in the scheme plan. That's actually the same as the current situation. Now, here's a change. Under the strata reforms, the seller needs to give the buyer the bylaws, all of the bylaws that apply to that particular property, and that's so the buyer can understand what rules are in place for that strata scheme. The schedule of unit entitlements, as I said, that's not a changed requirement. And if it's a leasehold scheme, the strata lease for the lot. And if you want to find out more about strata leases, as I said, stay around for the next session. Before the contract is signed, the seller must give the buyer the minutes of the most recent AGM and any more recent minutes and the statement of accounts, or a statement setting out the strata company does not keep minutes or does not keep statement of accounts, or the seller has been unable to get them, and why. Now, the reason we wanted to include things like minutes is that really tells a lot about how the scheme is being run. It is possible that strata schemes might have perfectly valid reasons for not having minutes. For example, 2-lot schemes don't need to have meetings, therefore they don't have minutes. And schemes of 3 to 5 lots can actually do a bylaw saying we don't need minutes. So under those circumstances, the seller might say, I haven't given you the minutes because under the Strata Titles Act, or according to our bylaws, we don't need to have meetings, therefore there's no minutes. So there are valid reasons why you might not have the minutes. And we also wanted to make it, the seller doesn't absolutely have to provide the minutes. It's not like the sale's off if the seller can't find them. But if the seller, for some reason, can't provide the minutes, they have to say why. And if, for example, it's a completely dysfunctional strata scheme and we haven't had an AGM for 5 years, that would be information that really tells something to the buyer. Money. So, before the contract is signed, the seller must give the buyer what the levies were for the previous year. If the scheme is new, an estimate of the levies for the year after settlement. Next to the purchase price, levies are going to be the biggest expense faced by the buyer. So it's very important that they have some idea what the levies are. Also, what must be provided is details of any debt owed by the owner to the strata company. Why is that important? Well, if something, heaven forbid, should go wrong in the settlement process and that not be cleared, those sorts of debts actually run with the lot. So congratulations, the new buyer gets those debts. So that's something that needs to be said. And details of any exclusive use bylaw that affect the lot. Now, an exclusive use bylaw is, for example, where it's actually common property, but there's a special arrangement for that lot to use that as a car bay, for example. Exclusive use bylaws typically have an arrangement where the maintenance expense of that particular area is paid by the lot owner. So as you can tell, that would be very relevant information for the new buyer to know. Okay, if the developer is the seller, when the developer is still in control of the strata company, then certain extra information must be given to the buyer. As I've already mentioned, they have to give the estimated income and expenditure for 12 months after settlement. It has to be an estimate because the strata company didn't exist before then. They also need to give details of any remuneration and other benefits the developer gets in relation to the scheme. So that could be, for example, perhaps the developer, when the strata scheme is first created, the developer is the strata company, the sole owner. They could, for example, use that opportunity to enter into a 5-year strata management contract and get a very nice commission from the strata management company. If they do that, that needs to be disclosed to any buyer. And that sort of information gives the buyer the ability to fairly take into account, well, no, that seems reasonable, or, oh, gee, that was a bit much. Are we sure that this strata management company is really the best one for the strata scheme? Similarly, details of any contract for the provision of services to the strata company, including its terms and conditions, and the estimated costs to members of the strata company. And when I say if the developer's still in control, it means if the strata has not yet been registered, or the first AGM hasn't been held, or the developer still owns 50% or more of the lots. Okay, why did we make these changes? Well, we think that this additional information will enable buyers of strata to budget for the ongoing expense of the scheme after purchase through the strata levies, understand the existing level of cooperation amongst owners and what upcoming costs there might be, such as major repairs, as seen in the minutes, and see what the overall financial status of the scheme is looking like through the statement of accounts. Avoidance rights if information is not given. So avoidance means getting out of the contract. So the buyer can get out of the contract under particular circumstances if information isn't given. So the buyer may avoid the contract before settlement if the seller did not give the buyer information they should have before the contract was signed, or gave the information but late after signing. But under those circumstances, if the buyer wants to avoid, they must notify the seller within 15 days of receiving the information. So it's not enough to get the information late, wait 2 months, go, oh, hang on, I think I might want to avoid the contract. It's got to be within the 15 days. But the buyer can only avoid the contract if materially prejudiced by the information not disclosed. Well, what does that mean? Well, for example, it might be that they received the AGM, but there was an extraordinary general meeting held after the AGM where it was called in a panic because everyone's realised there's a major flaw to the roof and the whole roof needs to be replaced. There's no money in the reserve fund. The only way it can be funded is through taking out a loan. And of course, the strata lot owners will have to service that loan. Now, under those circumstances, the buyer could say, it's really important to me that I didn't get those EGM minutes. In fact, I wouldn't have bought into this scheme if I'd known about this expense. So it would be easy under those circumstances for a buyer to argue material prejudice and use that as grounds to avoid the contract. However, let's say same situation, there was an AGM minutes, they were given, the EGM minutes not given, but if you look at the minutes, they're all just completely standard and no particular concerns were raised. The buyer can't then say, I didn't get the EGM minutes, I'm avoiding the contract, because if there was nothing of significance in there, you can't argue material prejudice. So we wanted to provide protections but not allow the buyer to just avoid the contract almost on a whim. Okay, so termination of schemes. As my colleague Glenda was saying, we've provided a new process to guide the collective sale or redevelopment of strata schemes. Oh, missing a slide, never mind. Right, so one of the challenges under the current Act is, well, there's one pathway to terminate the scheme, and that's for everyone to vote unanimously to do so. That's one of the pathways. Another pathway is for a single owner or mortgagee to apply to the district court for an order to terminate. So if that happens, there's no requirement for there to be a vote, there's no requirement for detailed information to be given to buyers, there's no safeguards for vulnerable owners, and no guidance provided to the district court on how it should assess the termination application. Now, this has actually happened. In 2016, there was a strata scheme where one owner took an application to the district court saying, I want this scheme to be terminated. and the District Court did actually terminate the scheme, even though it was against the wishes of a majority of owners. So there is this pathway in the Act. It was a fairly unusual case. It was a really dysfunctional strata scheme that had been quite badly damaged, but it does show that there is this pathway in the Act to terminate a scheme. And one of the things we wanted to ensure is that, with buildings getting older and, for example, people sometimes getting desperate about the ongoing levies, we didn't want this pathway to be used more. Okay, so this is why we looked into introducing this new process. It involves a lot of new safeguards, and it also involves a review of the State Administrative Tribunal if there's anybody dissenting to the termination. Okay, so why would you want to terminate a scheme? As I mentioned, older schemes can become very expensive to maintain. A lot of strata schemes were built in the 1960s. That's a fair time ago, and particularly if the building wasn't built to such a high standard in the first place, a lot of these schemes are actually looking at needing to replace plumbing, wiring, perhaps the foundations aren't that good or the structure. You can get to a point where the levies start becoming pretty steep. Added to that, sometimes changes to R codes or local planning codes may enable greater density of housing or allow current strata properties to change their tenure to a more desirable type, like freehold or survey strata. So those two factors together, the increasing expense and the desirable fact that your land might be worth quite a bit more, might have some people really thinking that it's time to terminate their strata scheme. And a strata scheme, for example, it subdivides the land. You actually have to get rid of that particular subdivision if you wanted, for example, to have higher density or other buildings there. Now, more than any other section of the Act, termination of schemes sort of goes between provisions that are in the Act and provisions that are in the regs. So, and this is because we really wanted to include a process that was very robust and provided a lot of consumer protection, and some of the detail around money and figures and so forth is in the regulations. So as I go through these slides, if you keep an eye out for the top right-hand corner, it will say whether it's in the Act or the regulations, the bit that I'm talking about. And that's particularly relevant because parts that are in the Act, they can't be changed now. They were introduced into Parliament late last year, but things that are in the regs are still subject to change, and those are the things that we want to consult with you about. Okay, so this is the Act. Schemes of 4 lots or less can only terminate unanimously. So those schemes, basically must get everyone on board. And certainly the hope is that smaller schemes, it's easier, hopefully, to get everybody on board than perhaps, a scheme with 100 lots or more. Schemes of 5 lots or more, they can still terminate unanimously. And in fact, that's always going to be easiest, simplest, cheapest to do. If you can get everybody to agree, that's always going to be the best way. However, where the agreement isn't 100%, there is a new process which can allow a termination to go ahead, but there must be at least 80% in favour. And, if there's one owner dissenting, then there's a process where it gets reviewed by the State Administrative Tribunal. And there are extensive safeguards in place to make sure that this process is fair. Okay, so my colleague Glenda covered off on a lot of these points already, but we'll be going into a little bit more detail. So there's 3 very broad stages of the process. There's actually a lot of steps, but starting high level. The outline proposal is the first stage. The outline proposal is where a proponent of the termination proposal, who's got to be an owner of a lot or having signed a contract for sale of one of the lots, they actually present an outline proposal to the strata company. The outline proposal is still fairly high level, and it explains what's proposed. Like, you know, I propose we develop the scheme, it'd look like this, approximately this is the amount of money I think that every person would get, and so forth. Now, that outline must include certain information, like it must set out the funding that's going to be made available by the proponent, the amounts of money available for funding, the kind of services that will be funded to do with advisory services to cope with the termination proposal, for example, the standard of evidence, for example, the invoices that lot owners must give to get access to this funding, and some explanation of how the process would go. So the strata company must vote on whether to proceed further with the termination proposal, and they do that within 3 months. The proposal only goes on to the next stage if at least 50% of the strata owners agreed that it was worth further consideration. So the next stage is the full proposal. So the proponent of the termination proposal, on getting the vote, yes, at the outline stage, yes, please go away and provide further information, they work up a full proposal, and there's a lot of information that has to be in that full proposal. But includes, for example, details of what the new development is, contracts of sale for each lot, a termination infrastructure report, a valuation report, which includes a sworn valuation for each lot, and that's prepared by a licensed valuer. The strata company has between 2 to 6 months to consider that, so they can meet several times. And when they've decided it's time for a vote, they must meet and have a vote on whether to go ahead with that termination proposal. If they unanimously vote yes, it can go straight to termination. Well, actually, there's a few more steps, but essentially it's very easy then to terminate if everyone agrees. If at least 80% agree with the proposal, but there's at least one dissenting owner, it will have to go on to the next stage, which is a SAT review. And if the required majority of 80% isn't reached, that's it. The proposal dies and isn't presented again. Okay, so stage 3 is the review by SAT. So SAT reviews that the process is followed. Now, the process itself, just following the process ensures a lot of safeguards. So, I've only summarised the process very briefly here, but includes that every lot owner must receive required information. Information must not be misleading or deceptive. There was no evidence of bullying, that everybody was given a fair amount of time to consider the information. So that in itself is an important safeguard. SAT also reviews the full proposal itself, and in particular when they look at the full proposal, they're looking at whether the proposal is fair and equitable, and that's for all parties. If there are any dissenting owners, SAT must ensure that they get at least market value for their lot and they'll be no worse off financially. So this is just a summary of the full process. Stage 1, the outline. Stage 2, the full proposal. Stage 3, the SAT review. And all of the costs of this process are borne by the proponent. Okay, so if you'll look up the top right there, this is in the regulations. So this is something that you can have a say on, and we really encourage you to go to our website, strata.wa.gov.au, and actually take the opportunity to have a say on anything in the regulations. So each of the 3 stages I've been talking about makes provision for funding. So in the outline proposal, the proponent must tell all the lot owners what the funding arrangements will be. And this is so that anybody looking at whether they're going to enter into this process, they understand that they can access money throughout the process. In stage 2, this is the full proposal stage, when all lot owners can access money for advice around legal, valuation, financial and taxation matters in relation to that termination proposal. So we wanted to ensure that every lot owner actually had a chance to get some professional advice to sort of work out whether this proposal is in their best interests or not. Then in stage 3, the SAT review stage, that's when any dissenting owner can access money for legal representation in SAT. It's only for people who voted against it, but that money can be used for them to get a legal person to represent them in SAT.
Could you just clarify whose money they're going to get?
The proponent's money. So the way this is, that we're thinking that this would work is, for example, a developer might approach the strata company and buy one of the lots, for example, and then they have to put all this money aside for various funding and so forth throughout the proposal for the proposal to go ahead. And if it doesn't happen, for example, in SAT will never find that the process was done correctly. Okay, so this is in the regs. These are the figures that we've provided for all the first stage, all lot owners. So in the full proposal stage, stage 2, all lots can get $1,500. Vulnerable owners can get $3,000. And if there's more than one vulnerable owner in the lot gets an additional $1,000. So that's for everybody to receive the advisory services, legal, valuation, financial and taxation. In the SAT review stage, stage 3, there will be $5,000 per lot. And remember, this is if there's any dissenting owners, this is the money that allows them to be represented in SAT. There will be $9,000 if an owner is also vulnerable. And if there's more than one vulnerable owner in a lot, the lot gets an additional $2,000. So, for example, if a lot has 2 vulnerable owners, that lot can get $11,000 in total. Where did those figures come from? Well, we did some research, for example, and looked at the Legal Profession Solicitors Costs Determination 2017. That's a document which sets out what lawyers of various experience levels can charge. And, for example, a lawyer who's entitled to practice has been entitled to practice for 5 years by themselves. They can charge $341 an hour. We looked at, for example, a choice article that said, well, if you want to get a valuation report, it'll cost you about $500. Internet sources sort of agreed that's about right, it can be plus or minus $100. And, for example, financial advice, $100 an hour, $350 an hour, something between there. So if you look at that $1,500, for that money a lot owner could look at getting, say, 2 hours of legal advice, a valuation report and an hour of financial advice. And, with those figures in mind, that sort of, if you look at the other figures, it seemed reasonable to us to get the job done. As you can tell, a vulnerable owner gets more. Well, why did we do that, for starters? As the Strata Titles Act was going through Parliament, Parliament was very concerned about vulnerable people. For example, if somebody's deaf or blind or doesn't speak English as a first language, or perhaps is mentally ill, or any range of things that might make it actually more difficult for those people to cope with the termination proposal coming in. So the reason we're providing that they get extra funding, the intent of that funding is to provide ancillary services that allow them to cope with the termination proposal on equal footing with their peers in the strata scheme. So the regulations provide a definition of who is a vulnerable owner, and it's somebody with a diminished capacity in any of the following areas. Their understanding of the process. So, for example, they have difficulties because they have a visual or hearing impairment, English is not their first language, or they have a cognitive impairment that affects their understanding. Now, these aren't exclusive examples. If you could argue I have some difficulty understanding this process for any other reason, that will also meet the criteria. Okay, so it might be somebody with a diminished capacity to cope with the process. For example, they're mobility impaired, have a mental illness, or are in poor health. And it could be that they have difficulties in responding to the process, and this one's really specific to socioeconomic factors that impair their ability to access professional advice, such as being unemployed or a pensioner, or perhaps on some other sort of government pension. Okay, another protection that we provided for in the reforms is the independent advocate. The role of the independent advocate is somebody who can be the friend of lot owners and help them understand the termination proposal. They're independent. They must be independent of the proponent and also of the strata company. So the independent advocate, and we've flipped back to the Act again. So this is enshrined in the Act, the role of the independent advocate. They have the role of reviewing the full proposal and making an assessment of it. They make a presentation on the assessment, and that's given to all lot owners, as well as an actual report. And they have a very important role in identifying any vulnerable owners and advising them of their entitlements under the Act. We wanted to be sure that some people might actually be vulnerable and not really sort of know it, so we've given this person the role of actually speaking to lot owners and working out if they're vulnerable or not. So, if requested by the vulnerable owners, the independent advocate will help refer them to independent providers of advice or representation and help them to obtain benefits under the trust. And this was a protection that Parliament was really keen to see in the Act rather than in the regs. Okay, so we've jumped back to the regs again. So the regulations set out who can be the independent advocate. So they can be a lawyer or a person who provides social services, and social services is within the meaning provided in the Children and Community Services Act 2004. The independent advocate can engage others to assist them perform their duties, including a medical practitioner, psychologist, interpreter, financial counsellor, or a person trained in disability awareness. The cost of the independent advocate may not be more than $13,000 plus $1,000 per lot in the strata scheme. So, for example, an independent advocate for a 20-lot scheme could receive up to $33,000 or $113,000 for a 100-lot scheme. One of the documents that must be in the Stage 2 full proposal is the valuation report that I mentioned earlier. Again, this is in the Act. So the termination valuation report sets out a valuation of the market value for each lot in the Strata Titles scheme. The intent of this is for all lot owners to be able to understand what it is, how much their strata scheme is actually worth, how much their lot is worth, and take that information on board when they're considering the termination proposal and whether it's viable. The regulations provide that the valuation methodology to be used is a sales comparison methodology, taking into account recent sales history, highest and best use of the lot, the value attributable to the owner's interest in the common property of the Strata Title Scheme. Now, one of the reasons we wanted to provide that is just to be clear, it's not, if a lot owner has a rather shabby rundown lot, the valuation of it isn't just what it currently is. It could actually also reflect, for example, there's been an increase in allowable density for that area. That is something that will actually be reflected in the value. So it's not just, crumbling walls with concrete cancer or, problems like that. It's yes, but it's on very valuable land. So those factors are taken into account to make sure that no lot owner is basically unfairly treated in the termination proposal. Okay, so the Act sets out that there must be a termination infrastructure report. So this is one of the documents that must be in the full proposal. That report includes a report on the condition of the buildings and infrastructure within the scheme, prepared by a structural engineer. The scope of works needed to repair or replace the buildings and infrastructure. The regs set out that this must be prepared by a licensed builder, and a report on the estimated costs of the works to repair or replace the buildings and infrastructure prepared by a quantity surveyor. Now, the reason that's in there is, again, it allows strata owners who are considering the termination proposal to sort of go, that's how much it would cost to get the building nicely repaired and so forth, and here's a report on what the infrastructure really is. Perhaps it's good, perhaps it's not so good. So that's something that factors into their consideration. That infrastructure report is also a very important document if the proposal later goes to the SAT review stage, because it's information that SAT can look at when it's trying to consider the fairness and equity of the termination proposal. The actual state of the buildings is really valid. So, for example, if that report said the whole thing's crumbling and it's falling down, then SAT can sort of look at it and go, well, it doesn't seem that fair for somebody to be holding out when, here's a nice proposal that everyone will get, lots of money for. Okay, so if there is an objecting owner, and again, this is in the Act, dissenting owners must not be worse off financially because of the termination proposal. So in order to achieve this, SAT must consider whether they should be paid 10% or more above market value, paid for removal costs, disruption and reinstatement of a business, for taxes like capital gains, GST and duty, for legal and other costs to discharge the mortgage and buy a replacement lot if a replacement lot is being offered. Because the Act actually allows for some consideration if there's a like-for-like replacement lot. If the objecting owner is being offered one of these, SAT must consider whether the value of that replacement lot is equivalent to the fair market value of the current lot, and how the location, facilities and amenity of the replacement lot compares with the current lot. So we didn't want a situation where perhaps a strata owner has a lot in a prime location with river views, and the proponent says, yeah, here you go, here's a lot in a far-flung suburb and you've got a view of an alley. Okay, so one of the things we wanted to ensure is we didn't have the perverse outcome that everybody has to go through this full, very, very detailed termination proposal if in fact everybody agrees that the scheme is to be terminated. So the regulations has made some special provision if there's a unanimous proposal for some reduced standards in that full proposal that I've been detailing. To access these reduced standards, everyone in the strata scheme must agree, even before the outline stage, that yes, in principle we agree with this proposal, and we all agree that it will be unanimous and it will only go ahead if it's unanimous. And if that agreement is in place at the outline stage, then the full proposal has a number of requirements that are easier or aren't in fact required at all. So, for example, if it's a unanimous termination, you still need an independent advocate, but they don't get paid, and they don't have to be a lawyer or a social worker, for example. In a unanimous termination, there's nobody needs to, or there isn't money put aside for funding for the advisory services, because everybody said at the start, yeah, no, we want this termination. And in particular, we imagine this particular sort of termination will be more of a owner-initiated, where everyone sort of agrees, hey, if we all agreed to sell, we could cash in on this increase in density ourselves rather than using a developer. So people can still request funding for advisory services in this unanimous model, but if they do, it's essentially it's like they've dissented and the proposal lapses. If a termination proposal is to go ahead, it has to be one where funding is provided, so the unanimous proposal actually lapses. And you'll note that in any unanimous proposal to terminate, a SAT review is not required. Okay, in summary, the strata reforms I've been addressing in this presentation for the first section give the buyer better information about the scheme that they're proposing to buy into, and introduces new safeguards for the termination of schemes, which provides an independent review by SAT if there are any dissenting owners, and has a more streamlined approach when all lot owners are in agreement about terminating the scheme. Okay, so as we've been saying, we're really calling for people to provide feedback. The proposed regulations are available on our strata.wa.gov.au website. And if you want more information, in particular, you can relive the glory, because there's a video of this presentation, so you can look at that again. Or you can also subscribe for updates as they happen. And, oh yes, I must say, I'm not actually a lawyer. I've done my best with the information I've presented here, but if you wanted to actually, take my advice into effect, rest assured there's no better way to really be well informed than to actually read the legislation yourself or to take some legal advice from somebody knowledgeable.